Welcome. Today we're diving into how I'd invest $1,000 in 2026 step by step. Whether you're new to investing or looking to refresh your strategy, this guide will help you make the most of your money. We'll cover everything from setting goals to choosing the right assets, all tailored for the financial landscape of 2026. Let's start by understanding why having a plan is crucial and how a thoughtful approach can help your money grow over time. Ready to take control of your financial future? Let's get started with the basics. For investing a single dollar, it's important to define your financial goals. Are you saving for a short-term purchase, building an emergency fund, or planning for long-term wealth? Knowing your objectives will shape your investment choices and risk tolerance. In 2026, with new opportunities and challenges, being clear about your goals will help you stay focused and avoid impulsive decisions. Take a moment to write down what you want to achieve with your $1,000 investment. Understanding your risk tolerance is key to building a portfolio you're comfortable with. Some people can handle market ups and downs, while others prefer stability. In 2026, markets may be more volatile, so it's important to honestly assess how much risk you're willing to take. This will guide your asset allocation and help you avoid panic during market swings. Think about your comfort level with losing money in the short term for potential long-term gains. For investing, make sure you have an emergency fund in place. This is a safety net for unexpected expenses like medical bills or job loss. Ideally, set aside 3 to 6 months worth of living expenses in a high-yield savings account. In 2026, with economic uncertainties, having this cushion will give you peace of mind and prevent you from dipping into your investments during tough times. Diversification means spreading your money across different types of investments to reduce risk. Instead of putting all your eggs in one basket, you'll invest in a mix of assets. In 2026, this could include stocks, bonds, real estate, and even alternative assets. Diversification helps smooth out returns and protects your portfolio from big losses if one investment performs poorly. To start investing, you'll need to open an account with a brokerage. In 2026, there are many online platforms offering low fees, user-friendly interfaces, and educational resources. Compare options based on fees, available assets, and customer support. Choose a platform that fits your needs and makes investing accessible and straightforward. Index funds are a great starting point for new investors. They track the performance of a market index like the S&P 500 and offer instant diversification. In 2026, index funds remain popular for their low fees and steady returns. By investing a portion of your $1,000 in index funds, you can participate in the growth of the overall market without picking individual stocks. Exchange-traded funds, or ETFs, are similar to index funds but trade like stocks. They offer flexibility and access to a wide range of sectors and themes. In 2026, there are ETFs for everything from technology to clean energy. Allocating part of your $1,000 to ETFs can help you target specific industries or trends you believe in, while still maintaining diversification. If you're comfortable with more risk, consider investing a small portion in individual stocks. In 2026, look for companies with strong growth potential, solid financials, and innovative products. Remember, picking stocks requires research and carries higher risk, so limit this part of your portfolio to an amount you're willing to lose. Bonds are a more stable investment compared to stocks. They pay regular interest and can help balance your portfolio. In 2026, consider government or high-quality corporate bonds for steady income and lower risk. Allocating a portion of your $1,000 to bonds can provide stability, especially during market downturns. You don't need thousands to invest in real estate. In 2026, platforms allow you to buy fractional shares of properties or invest in real estate investment trusts, REITs. This gives you exposure to the real estate market without the hassle of owning property. Consider allocating a small portion of your $1,000 to real estate for added diversification. Alternative investments include assets like commodities, cryptocurrencies, or collectibles. In 2026, these options are more accessible than ever, but they come with higher risk and volatility. If you're interested, allocate only a small portion of your $1,000 to alternatives and make sure you understand the risks involved before diving in. Automation can help you stay consistent with your investing strategy. Many platforms in 2026 offer automatic deposits and rebalancing. By setting up recurring investments, you remove emotion from the process and make it easier to stick to your plan, even during market ups and downs. Investment fees can eat into your returns over time. In 2026, compare expense ratios, trading fees, and account maintenance charges before choosing investments. Opt for low-cost funds and platforms whenever possible to maximize your $1,000's growth potential. Taxes can impact your investment returns. In 2026, take advantage of tax-advantaged accounts like IRAs or HSAs if available. Also, consider strategies like tax loss harvesting to offset gains. Being mindful of taxes helps you keep more of your investment growth. Investment landscape is always changing. In 2026, stay updated on market trends, economic news, and new investment products. Use reputable sources and avoid making decisions based on hype or rumors. Staying informed helps you make better choices and adapt your strategy as needed. Regularly reviewing your portfolio ensures it stays aligned with your goals. In 2026, markets can shift quickly, so check your investments at least once a year. Rebalance if your asset allocation drifts too far from your plan. This keeps your risk level in check and helps you stay on track. Investing can be emotional, especially during market swings. In 2026, it's important to stick to your plan and avoid making impulsive decisions based on fear or greed. Remember, successful investing is about patience and discipline, not reacting to every headline. Compound interest is your best friend in investing. It means your earnings generate more earnings over time. In 2026, even a $1,000 investment can grow significantly if you reinvest your returns and let time work its magic. The earlier you start, the more powerful compounding becomes. While you hope not to touch your investments, it's wise to have a plan for emergencies. In 2026, know which accounts or assets are most liquid and can be accessed quickly if needed. This way, you're prepared for the unexpected without derailing your long-term goals. Technology makes investing easier than ever. In 2026, use apps and tools to track your portfolio, analyze performance, and get personalized advice. Many platforms offer educational content to help you learn as you grow your investments. Sustainable or ESG, environmental, social governance investing is gaining popularity. In 2026, you can align your investments with your values by choosing funds or companies focused on sustainability. This approach lets you support causes you care about while aiming for solid returns. Dollar cost averaging means investing a fixed amount at regular intervals, regardless of market conditions. In 2026, this strategy helps you avoid trying to time the market and reduces the impact of volatility. It's a disciplined way to build your investment over time. Investing isn't a get-rich-quick scheme. In 2026, set realistic expectations for your $1,000 investment. Understand that markets go up and down and focus on steady long-term growth rather than chasing quick wins. Patience and consistency are key to success. The world of investing is always evolving. In 2026, commit to lifelong learning by reading books, following experts, and staying curious. The more you know, the better decisions you'll make with your money. Investing in your knowledge is just as important as investing your dollars. Many investors lose money by making avoidable mistakes like chasing hot stocks or ignoring fees. In 2026, learn from others' experiences and steer clear of these pitfalls. Stick to your plan, review your investments regularly, and don't let emotions drive your decisions. Every step forward counts. In 2026, celebrate your progress no matter how small. Whether it's your first dividend payment or reaching a savings milestone, acknowledging your achievements keeps you motivated and reinforces good habits. If you're unsure about any part of investing, don't hesitate to seek help. In 2026, financial advisors and online communities can provide guidance and answer your questions. Getting expert advice can help you avoid costly mistakes and build confidence in your decisions. Take time to review your investment journey. In 2026, look back at your goals, assess your performance, and adjust your strategy if needed. Regular reviews help you stay accountable and ensure you're moving in the right direction. Investing $1,000 in 2026 is all about having a plan, staying disciplined, and making informed choices. By following these steps, you can build a strong foundation for your financial future. Remember, the most important thing is to start, no matter how small the amount. Here's to your investing journey and the growth ahead.